Welcome to Biz Wire. We lead off today with new regulations amid expectations of rising housing prices as China's central government last Friday rolled out specific rules to further tighten control of the property market. The government said in an online notice that homeowners who sell their homes will be levied an income tax as high as 20% of the profit they make on the transaction. Well, prior to the new rules, income tax was 1 to 2% of the sale price. The notice also said local branches of the central bank in cities with soaring home prices can increase the down payment rate and mortgage loan interest rate for home buyers purchasing a second unit. Now, currently, minimum down payments for second homes are 60% of a home's value, while mortgage rates for such purchases are 1.1 times the central bank's benchmark interest rates. The notice also said local governments will be held accountable for curbing soaring home prices and asked them to make specific schedules. The central government said it will step up inspections of provincial-level government's property market control work, and those who fail to meet their targets will be penalized. The central government said they will study the pilot cities where a property tax was levied and speed up the introduction in more cities, though, as we've said many times on this show, this will be met with much resistance from officials with more real estate than they could afford on their official salaries. There is much talk of an oversupply or a bubble in Chinese real estate, but 200 million migrant workers currently live in dormitories or slum housing. Tom Miller, author of China's Urban Billion, said that Chinese cities actually have a significant shortage of housing, somewhere in the region of 70 million units. And Miller says China is not building too many new apartments, it is building too few. At Friday's government announcement, the government also reiterated that 4.7 million affordable homes are to be finished this year, and work on another 6.3 million will start. The government also plans to establish a unified system regarding personal information on home ownership by the end of 2015. Well, this will not only make calculating and collecting taxes easier, but also increase government transparency, as officials would have to disclose all of their holdings. The announcements were met with both skepticism and criticism. Li Chang'an, an economics professor at the University of International Business and Economics, said the income tax hike will curb second-hand home transactions, but have a limited impact on first home purchases. However, Li also said it will be difficult to determine the profits homeowners make during the transactions, as it would be hard to know how much a home cost when it was purchased by the seller. The housing market experienced a short cooling-off period starting in 2010, when tightening policies like higher down payments and restrictions on third home purchases were introduced. But the market began to heat up last year after the central government put more emphasis on economic growth. A private survey showed on Friday that in February, average home prices in China's 100 biggest cities rose for the 9th straight month, although the pace of increase slowed. The new policy announcement on Friday spurred a surge in existing home transactions. Some analysts expect the tax to have the perverse effect of driving up the price of existing homes, as buyers will have to cover most of the new tax and pushing more of the sale into a side contract to hide both the true price and gains from the government. Bill Bishop of the Sinocism newsletter said the real estate market in China is already quite distorted, and these repeated rounds of repressive policies may be just layering on more distortions. Vanke, China's biggest developer by sales, is hesitant to draw too many conclusions about the new policy and said that the market is a complicated system and will have to wait and see to see the short-term impact. Economic data released in the last few days has called into question the strength of China's recovery, but these measures show the government is so concerned about the social implications of a resurgent property market that cooling the important sector is of highest priority.